Hey traders, in today's video, I'm going to show you a few examples of trading opportunities that I used to help dig myself out of a drawdown this week and sort of illustrate the importance of second chances in the markets and not really giving up on the trade. Also, I'm going to give you my top 5 book list to give you some reading material for this holiday season. Hey traders, Akil Stokes here, head currency trader with Trading Powered, and thank you once again for joining me for a weekend review video. After a week off from trading, thanks to the Thanksgiving holiday, I was pretty excited to get back into the markets, and I actually started off the week firing off a good amount of trades. Now, unfortunately, I also dug myself into a bit of a hole and was facing a drawdown. Now, not too much of a drawdown. I was down about 35 pips, which is really not too much at all, but it was a back and forth week. And for you guys that are in the syndicate, if you watch Jason's war room meeting this morning, he was in a similar situation where he had a lot of gains earlier in the week and he gave some back yesterday. And he said something that really caught my attention. And it was trading really is 2 steps forward, 2 steps back, 2 steps forward, 2 steps back, then finally 2 steps forward, no steps back, 3 steps forward, 1 step back. Meaning that trading is a grind. There's a lot of back and forth. You win some, you lose some, you win some, you lose some. Then every once in a while you hit those streaks, and that's where you start to make your profit. And it was very interesting because this was one of those weeks where, or I should say this, Wednesday was one of those days where I just didn't feel like trading. It wasn't because of the drawdown. It was just, I did my top-down analysis. I knew that Thursday was the ECB press conference. Friday was the non-farm payroll. So I expected the markets to be pretty quiet leading up to those news events. And when I did my top-down analysis in the morning, there was really just nothing on my radar. And what's worse is, I do my top-down analysis initially for my personal trading at about 6 o'clock every morning. Then I have to come back and do it again for my live room members at about 8 o'clock in the morning. So I'm sitting there saying, I got to do this analysis over again. We're not going to find anything. It's going to be a boring day in the live room. I'd much rather walk down to the golf course, which is right around my house, and play 18 holes or maybe play 9 holes and survive the other 9 is what usually happens. Anyway, then I remembered, I said, you know what, Akil, trading is a business. And sometimes, it's been a while since I had a job I had to go to. But I remember when I used to have to work that there are some days where you just don't feel like going in. And, well, you got to suck it up and go in anyway. And I'm glad I did, because with the help of our live room members, we actually found 2 very good trading opportunities, a long entry on the Euro Yen and a long entry on the Euro Aussie. Now, what I want to do is I want to walk you guys through the Euro Aussie trade, because it's a lot more interesting than the Euro Yen. They're both structure-based trades, the normal stuff, which ended up doing pretty well. But the Euro Aussie was in particular a special trade because I actually double dipped it, meaning I profited twice on that trade, and here's how. Initially, we were looking at the Euro Aussie right down in this level. Right down in this level down here. We did our top, I'm not going to take you through the whole thing, but we did our top-down analysis. On the daily chart, we had a higher high, higher close, telling us trend continuation. We're looking at the series of higher lows and whatnot. And we saw the market come right down into structure level. And actually, we have 2 structure levels down here. We had a minor structure level, which caught my attention right here. For you guys familiar with supply and demand zones, is going to be, well, a little above it is going to be one of those zones. And then we had a lower structure zone right here as well. And what we ended up doing was we were watching this on the 60. We were watching price action. Again, I like to look at the wicks of the candles. The wicks of the candles will leave clues. And you can see, if I take my pointer here and zoom in a little bit, you can see that the wicks are telling us what? Back down here. Sellers, bears, push down, buying pressure. We try again, buying pressure. Look at these, buyers, 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 buyers. Each time we push down and get rejected, we're seeing buyers or we're seeing bulls in the market. And when we took a look at that and said, hey, this seems like a good opportunity to get long. And again, the Euro Yen trade was very similar. So what we did was we took a long opportunity here. We used a double bottom entry technique. got stops right below structure lows, didn't really risk too much on this trade. And we were shooting for a move to our next structure level. So we were shooting for a move like this. If we got in right here, our initial risk was looking like this, right? Little small risk, nothing to be afraid of. Initial risk looking like that. Our initial reward was a move back up into previous structure. Look left, structure leaves clues. We want to pay attention to areas like these bottoms right here, and then this, I guess you can call it kind of a shoulder on the left-hand side. Anyway, any way you chop it, the risk reward is pretty good on this opportunity. So what we did was we entered, but I also told traders this. I was a little hesitant. Why? Because this week has been filled with Aussie news. And for you guys who are unfamiliar, Aussie news moves the market a lot, mainly because of when the news occurs. Typically, Aussie news events come out between 7:30 and 8:30 New York time, which is right around the time of the Asia Open. And for you guys who are new to trading, no one trades the Asia Open. Nobody. So when you get these when you get these news events, even if they're not massive, it tends to move the currency a lot. So it's something that over time that I've learned to adjust to. I came into the game saying, hey, I'm a technical analyst. Only technicals are what matter. Don't care about fundamentals. But, you can only get burnt so many times before you realize, hey, this is important. That's important. And I've realized over time that I don't want to mess with these Aussie news events. So I told the traders I was a little hesitant about this trade because once that news event comes out, it's more like gambling. It's more like closing my eyes and hoping I win because the market could react, who knows how many different ways. So what I did was this. Held this trade during the day. We went sideways and fluttered in the water. Didn't really do much. We came up to about right here. Came up to about right here before the news event came out. And what I did was I took off my profit. I forgot how much I made, 40 pips, I think. Yeah, 35 pips on this move right here. Australian news came out, and guess what? Boom. Tanked down. I'm sitting back like, yes, I made the right call. Now, whichever way the news would have came out, I would have made the right call because I followed my rules. But it's always good when the market goes against you and you're like, and instead of in your favor, because then you start having thoughts in your head like, man, should have stuck in there and stayed with it. Would have had 100 pips. Follow your rules. You don't want to get into you don't want to get into gambling. But what I noticed was this: as the market spiked down, just as we talked about before, finding that buying pressure, we found some more at the end of the news event. So after waiting for the close of the candle, I repeat, after waiting for the close of the candle, one more time, after waiting for the close of the candle, very important there. Very important. After waiting for the close of the candle, I re-entered again and rode this bad boy up to my original profit-taking area, banking in about, I think another 68 pips on this position. So basically, I double dipped the same trade and made about 100 pips total off of it. And I was talking about it, recapping it or reviewing it with the live room members today. And I said, this is nothing but a structure-based trade, guys. I mean, what is the thing we learned in week 1 of the 12-week transformation? Right? Starting point, swing low to swing high, outside return, new structure high. What does new structure high mean? Right? Or higher high, higher close, new structure high. That should mean trend continuation in that direction. What do we look for? Outside return. If we're going to continue bullish, we should see what? An extension, higher high, higher close, new structure high. Well, what do you see right here? Starting point, new structure high, outside return, new structure high, outside return, new structure high, outside return, new structure high. It's no different than the basics. The problem is, and I hope I don't offend you guys out there, is, I would say about 80% of you watching this video don't know how to read a price chart. 80% of you don't know how to read a price chart. Now, that could be for a few reasons. Either you never learn how to, which is completely okay. That's why you're here watching this video, hitting that like button, sharing, subscribing, telling your friends how great I am. Or Some of you are just greedy. Some of you are only looking at the market as a way to make money. And if it doesn't directly correlate to making you money, like say an advanced pattern was, if you can't pick it up and trade it right away, then guess what? You don't take the time to learn it. And when you don't take the time to learn it, you don't learn the small things like this that can make you a killing. And again, going into these trades, I was down about 35 pips for the week. I turned that around to being almost up 100 pips for the week. So a really good example here of using that second chance. And actually, speaking of second chances, there was another great example we had on the pound Swiss. I remember showing this to my syndicate members. It was a potential advanced pattern that had a very, very high risk. I'm talking about the stop loss was at minimum about 100 and something pips away, which for most of the traders I work with is a little bit out of their range. Over 100 pips is out of my range too. I don't want to have that much at risk. Why? Some of you saying, well, Keel, how come you can? I can if I wanted to. I just don't want to. It's exposure. I don't want to go past my maximum drawdown. But that's a story for another time. But anyway, check out what I'll do is I'll edit this tape. I'll put in a portion of the syndicate video where I explain the pound Swiss trade for you guys, and then I'll come back and recap what happened. It's a pattern, but it's kind of two patterns depending on what you're trading. If you're here on a daily chart, you're looking at a potential bat pattern right here on pound Swiss. Shout out to, I think it was Cody who brought this to my attention, one of my 12-week members. But we're looking at an X to A. Don't get all excited, Cody. Remember, if it loses, you owe all of us money. X to A to B, B to C, and a CD completion up here at 53.96 for a big old bat pattern here on the daily chart. So again, 153.96 bat pattern completion on the daily chart. Stops need to go above X. It's a little tough with stops because your stops are probably going to lie somewhere in between these structure zones. You can see there's a DSR zone here. The safest way for stops is to be above 155.50. It's going to give you a horrible risk reward, but if you're able to stomach it, it's not going to give you a horrible, it's not going to give you as good of a risk reward, I should say. But if you're able to stomach it, that's your safest point for stops. If not, have normal stops in and just be prepared to fire away again if this trade indeed loses. One of the things that scares me about this level is typically whenever you see two major structure levels, the higher one gets hit. And sometimes it comes in the form of a candle like this. The worst possible candle that spikes all the way up and gets sucked back down. And you're like, really? You just stopped me out and now you want to roll over? It happens. So it always worries me to take trades like this when there's two structure levels that are very close to each other. But bat pattern on the daily. However, if we go down to the 240, we're going to have a different view of things. A different view. And I got to end this video soon. We're getting long. This is going to be the last pair we look at. I promise you guys. If we go down to a 4-hour chart, we can start from a different X leg. So on the daily chart, we started from up here at 54.53 from our X leg. On the 4-hour chart, we have an impulse leg right here at 54.10. And we're going to have the same formation. It's still going to be a bat pattern. Our ratios are still the same. We don't hit the actually, let me pause the tape real quick. 618 comes in at 52.31. Let's just see where the highs of our B leg is at. 52.29. Okay, so we just miss it. Again, if it hits that 618, we're looking at an entirely different beast. And in fact, we're looking at no pattern at all if that happens. But we just missed that 618. I don't have a close enough rule. It's either it hits it or doesn't. So we're still looking at a bat pattern. But this time our bat pattern is going to come right here at 53.57. And you can see we've actually already hit that. So we're looking at an at-market bat pattern here on the pound Swiss. For you guys that are CTS traders, you can add in RSI being overbought. You can look for that retest of structure. But it's going to be a slightly different trade here. And what we're looking at here is if we use our 113 Fibonacci inversion as a stop loss. It's going to be a 20-minute video. Gosh. We're looking at stops right between these right between these DSR levels. So your stops still aren't going to be good. You're looking at stops at about 54.70. 54.70. You're looking at a stop loss about right here, 54.75. And you're looking at targets about 52 flat. So not too bad. You're looking at about 120 pips of risk. If my math is correct, I'm looking at about 140 pips of reward. So a bat pattern at market. Now, of course, if you do wait for that double top, let's say you go down to a 60-minute chart, a lower time frame. Say we go down to this lower time frame, you wait for that double top. You can enter this trade with less risk. You can use your rules for trading a double top, take that ATR stop, and possibly get a risk that's I would still get above this 54 even handle, but get a stop loss that's right here. And you can see that's going to make your risk reward a lot better, especially if you're not able to take 150 pip stop loss, which some of you aren't, and I don't. So again, looking back at the pound Swiss now, we had a rollover after this morning's news events, but what I want you to pay attention is to the risk. The initial risk was all the way up here, above that 55 even handle, right? But by waiting for that second chance, what we actually did was we can minimize our risk to this. And actually, this particular trade gave 3 chances to get involved. So there's well, unless you were sleeping, if you were active during this period, there's not a lot of excuses not to get into this trade. Now, with that being said, I didn't get into the trade because it happened during the London session, but many of you guys are awake in the London session. But we came up here, market put in a double top just barely. We then broke and closed. So we had our initial entry for the bat pattern here. We had a double top entry here, which could have allowed you to move stops from all the way up in this region to about right here. We then put in a lower low, lower close, came back to retrace that level for a 26.18 trade, giving you a third chance to get involved in the market before rolling down. So again, taking advantage of these second chances and third chances and really knowing how price action moves is key if you want to separate yourself in the market. And let's just be honest about it. Most of you guys will fail. Most of you guys are going to fail at trading. There's an 80-20 rule in life in general. 80% of people are just losers. And not losers, that sounds kind of harsh, but 80% of people in general are comfortable. They're set. They're in a comfort zone they don't want to get out of. Trading's the same way. 80% of traders will fail. So if 100 of you guys in this room are in a room, 80% of you are going to fail. Now, out of the 20 left, there's probably going to be about 10% that do okay, that just, they don't blow an account, but they don't really make any money off of it. And then there's 10% that excel, 10% that go on to making consistent profits over time. And the only difference between the 10% that go on to be successful and the 10% that are just, I guess, middle of the pack is paying attention to the small details, adding filters to trades, learning how to manage money, how to manage a trade, being able to read price action and getting involved in second chances and not missing opportunities, not being that trader that says, oh man, that would have been a great trade. Being that trader that says, oh man, that was a great trade. So this stuff is important. Don't overlook it. Please. And if you are, I don't want to work with you. Lastly, speaking of that, I got an email from Uncle Ted. Forwarded me this. It says, I said, oh my gosh, Uncle Ted, since I've attended, I guess let me move this over to my other screen. Help me read it better. It says, oh my God, Uncle Ted, since I've attended both your live session and technical training with Akil, my trading has grown leaps and bounds. I've added rules and tweaked a few things to my trade system, and it has made such a difference. I back tested and forward tested and calculated expectancy and quantified everything. At first, here's the important part. At first, I thought I would lose opportunities because it took so much time to analyze all the data, but it was well worth it, well worth the time spent. My confidence and entry points have improved, so mission accomplished. I feel like I owe you guys royalties. I'm doing so well. You guys have changed my life. and my trading. And I want to say thank you, thank you, thank you so much. It means the world for me, and I feel empowered. Well, I am empowered with much appreciation and gratitude. So first of all, I'm glad I can play a small part in showing you how to be successful. But as you can see, the hard work was done by yourself. And again, just talked about how you want to separate yourself from the pack. This is what successful traders are going to do, guys. Successful traders are going to take the time. They're going to say, I'm not going to trade live. I'm going to sacrifice months, maybe a year, and I'm going to do all the back testing the right way. I'm going to do all the forward testing the right way. I'm going to crunch the data, and I'm going to basically make this investment in setting up a trading strategy that's going to be profitable. And that may take time. It may mean missed opportunities now, but in the long run, it will pay off greatly. And you can see for this trader, it has. It took a lot of work, right? Probably a lot of sleepless nights doing this. But now the benefits are being reaped. Traders that want the shortcut, guess what? You're never going to achieve this. So this was a very good email, and it kind of, I read this yesterday, and it kind of gave me the idea of what I want to talk about for this week's weekend review video. So lastly, I want to give you guys my top 5 book list. I actually haven't thought about this, so I'm going to go off the top of my head. Just give me a few seconds. Let me actually venture back to my library. All right. So next to me, I have, I guess what I would say are my favorite trading related books. I'm going to go in backwards order. Number 5 is going to be Pitbull by Martin Swartz. I just finished this one up, so it's fresh in my mind. It was a close race for the 5th book, but I really just like the story of this book and hearing Martin's story. And one of the things that really caught my attention was that this guy was one of the greatest traders out there, yet he failed at money management. Meaning when he tried to trade other people's money, it just didn't go well for him. And that was something that I experienced in my past when I first started managing money, and it just went awful. And I always realized, or I always wondered, I should say, was it me? Was it the markets? Am I built out for this type of stuff? And, it's just, the book made me realize it's just an entire different game when you're managing money. If you can be one of the best traders in the world and, feel pressure to report to certain people or feel pressure to switch up your trading strategy when you're managing other people's money, then I've got an excuse as well. But a very good book, one of the best traders out there. A lot of the emotional up and downs of trading are talked about in this book. So Pitbull would be my number 5 book. Number 4, it's a series called The Winning Edge, and this was volume 4. Traders, Great Successes. Was this the right one? It might have been volume 1. Yeah, okay. This was the right one. The Winning Edge, volume 4. And this is a very, very hard book to find. This is one of the first books I read, and what I liked about it is it really talked about enjoying your trading. How trading, we all know this is a very stressful industry. It's a very stressful thing to do, trade. And how to enjoy it. And it gave lots of stories about, I guess, really some war stories about trading. And one that stuck out to me was a guy that became so frustrated at trading that he would go home and he would beat his wife and yell at his kid. And it talks a lot about how to leave the work at the workplace. And really just how to separate trading from your life. It also talks about stuff that, brings stresses like, having the right type of keyboard, ergonomic mouse, computers at the right level, so you're not, in a hunched, stressed position the whole time, and how that stuff can build up for the future. So that was a very good book, The Winning Edge, Volume 4. Next is Trade What You See, Larry Pesavento. This is probably my favorite intro book to advanced patterns. If you're looking for, if you're new to pattern trading, new to harmonics, and you just want to have the basics, a really friendly read, this is the perfect intro book. Scott Carney has some really good books too, Harmonic Trading, Volume 1 and 2. But this is going to be the one that is, Carney's are a lot more technical. So if you're not into seeing numbers and you get a little confused, this book lays it out pretty simple for you. Book number 2, Market Wizards. Market Wizards Volume 1. There's a few volumes. There's Market Wizards, the new Market Wizards, and Hedge Fund Market Wizards. The first one is my favorite. Now, Market Wizards, what it does is Jack Swagger, he interviews the top traders out there and really tries to see what makes them great, what makes them stand out beyond the rest. And what I really enjoyed in that book is each of these traders had a different technique. Each of them traded a different way and were still successful, which tells you there's no just one way to trade. I get these clowns that email me all the time. Oh, Keel, you shouldn't trade that way. You can't make money trading patterns or trading this. Sure you can. I'm not bashing how you trade. I'm not saying you can't trade that way and make money as well, your way. But don't bash me. There's tons of ways to make money. The key is you got to be consistent with it. So a really good book to see that. Also, most of these traders really stunk when they first started. And they stunk for a long time. I think except for one person, all of these traders went through a lot of hardships and a lot of struggles. And at the time when I read these, I thought trading was something you either have or don't have. Either you have what it takes to be good or you don't have what it takes to be good. And if you're not good right away, you should just quit and go home. And that's not the case. It made me feel really at home about being able to struggle and go through the hardships and know that these guys did it too. And, knowing that they turned out to be the best, well, gave me confidence that I can turn out to be the best as well. Lastly, my favorite book of all time, Trading in the Zone, Mark Douglas. I wish I would have read this a long time ago. I actually read it after I was already successful, but really great book on trading psychology. It allows you to realize what is wrong, but not only what is wrong, but what is wrong, but what's the reason it's wrong with you? Why are things going wrong, and how to go about fixing them. So it's a very good book on trading psychology. Also realize why I've been afraid of dogs for so long, so that helped too. So that's my book list, my top 5 books for this holiday season. Kind of got the idea from Jason's been doing the Jason Stapleton show. He's been doing the Great Knowledge giveaway, so I want to share my 2 cents as well. So thank you once again for joining me, guys. I will see you next week. Until next time, plan your trade your plan, and take care. Oh, also, before that, I did say this. I told syndicate members this yesterday. Tomorrow, I will be giving out the password to join me in the live room. It's a non-farm payroll Friday. I don't expect we're going to be doing much trading, so we can have a good old Q&A session. So if you follow me on Twitter or if you follow me on Facebook, check your Twitter feeds, check your Facebook feed around 7 o'clock, 7:30ish, anywhere between that area. I'm going to shoot you the link and the password to join me in the live room for free. So I look forward to seeing you tomorrow. And now, take care and have a good weekend.